Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's video, we're gonna be talking about your finances, your money, and your marriage. Substitute marriage for relationships, couples, whatever you wanna substitute it for. But this is when you're in a serious relationship with your significant other or someone else and you wanna be able to manage your finances. We're gonna go through 5 things, and then at the end of the video, I'm obviously gonna give you my candid thoughts as always. But these 5 things are kind of the core tenets that my wife and I have used, and knock on wood, has been pretty successful thus far. So stay tuned. Okay, so number 1 is pretty obvious. You should probably have this established before you even get into marriage or get serious with your significant other. This probably comes in the serious dating, like late phase dating, engagement phase, in my opinion, because you don't want to go into a marriage, especially planning a wedding, which is pretty costly for a lot of people out there. You don't want to go in there with anything hidden. So that's why number 1 is be honest and transparent. You're building a relationship, hopefully, once in your life. A lot of people do get divorced and things like that. But when you're building a foundation, you want to build a strong foundation. Skyscrapers are built on strong foundations. They dig deep, that way they can build high. So if you go into your, relationship or marriage or whatever you want to call it, with hidden liabilities, for example, which I'll name here, it automatically kind of takes a hit to that trust column. So this is why honesty really is the best policy. So I have 2 columns here. I have A and L, assets and liabilities. This is just to illustrate a very simple point. So I'll start with assets. So you want to lay everything, all your cards on the table. So you want to disclose, hey, I have a 401k. This is the balance. Hey, I have a Roth IRA. This is the balance. Hey, I have a paid off car, I have a paid off home, I have a paid off whatever. Anything that you have equity in that's a positive on your net worth, your balance sheet, if you will, your income statement, you wanna actually tell your spouse about these things. I'm not talking about the ultra wealthy. In that case, you're talking about prenups and things like that, which obviously my wife and I don't have. Her parents are immigrants, my parents are immigrants. But my point is that, we weren't well off enough to even discuss, there's no point of even having a prenup. So what I'm trying to talk to is I'm trying to talk to the 95% of the people watching this channel. It's always important to disclose assets because we're gonna get into later reasons why in this video. But also the most important one, especially in an early relationship, are your liabilities. So this is when you come into a relationship with, like, let's say student loans, you have a car loan, you have credit card debt because you just graduated from college, for example, you're still paying off certain things. These are the ones that you don't want to spring on your partner, right? It's like, hey, we're about to get married. Oh, I have a maxed out, American Express, or I have, $500,000 in medical, pre-med, student loans, for example. So what I'm trying to say is honesty really is the best policy because this is how you build a strong foundation and a strong level of trust with your significant other. Okay, number 2 is important because it's going to lead to number 3, so pay attention. So number 2 are goals. These aren't individual goals. Everyone has individual goals, individual hobbies, individual things that make them tick, but this one is going to be shared goals. So what are some things when you get married or you have a significant other or you want to start a family or whatever these goals may be, you need to get in line with your partner and figure out, hey, what are some shared goals of ours? That way we know, how to contribute. There's a reason for this, which will actually go into number 3. So what my wife and I have personally done is we've always had categories or different buckets for our savings. So if you've been watching my channel for any extended period of time, you probably already know what I'm gonna say here, but for the people that are new, this is very important. So what we like to do is we like to have joint savings accounts with different things that we contribute to. That way we know that we can afford it, okay? So for example, we have savings in emergency, okay? Number 2 is we have a travel fund. So this is how we know if we can afford to go to Southern Ohio or Southern France, okay? It just depends on how much money is in that account. Number 3 is taxes, putting money away for taxes. I run a business. It's a little bit different if you run a business rather than if you're a W-2 employee. But taxes are important, especially when married filing jointly. You get a lot of benefits with that. Number 4 is the house fund. So this could be maintenance, repair, or improvements for your house. It could be remodeling a bathroom, or the HVAC goes bad, or the plumbing goes bad, whatever. These are for those little hiccups here. And then number 5, we have car fund. So this could be saving for a new car, it could be for car repairs, it could be a down payment on a car. It just depends on what falls into that car category. And number 6, we have investing, okay? So this will go into anything that's outside of like our 401k, Roth IRA, whatever you guys are doing at work that is tax advantaged. This is typically going into investments such as real estate, private equity, private deals, things like that, and then also our taxable brokerage accounts. So with these goals, you need to figure out what's important to you as a shared couple, right? So savings is important to us. We have another daughter on the way here in about a week. Travel is important. Our house is important. Investing is important. All that good stuff. Okay, so the reason for talking about number 2 was to bring us into number 3, which is age-old debate. I know Dave Ramsey loves to have, one roof, one bank account, one marriage, that kind of a thing, which makes sense. There's been a lot of studies that show that typically couples that have joint bank accounts, or one bank account, if you will, they're typically, they say happier, they say, the marriage lasts longer, all those good things. It's kind of like a correlation or causation kind of thing. But basically, you don't have to do one or the other. So I'll actually tell you what my wife and I do. So my wife works. She's a nurse practitioner. She worked very hard to get her master's degree. I earn an income from, being a finance professional and also this YouTube channel. We both make our own money, right? But the way we treat it is that I have a checking account, she has a checking account, and then we have also all those combined shared goals, which we all contribute to. So whether I make $1 and she makes $1 million a year or vice versa, it doesn't matter because we just invest kind of a percentage of our account into each one of those categories. So you never really feel like, oh, this has to be 50-50, it's set in stone, we need one bank account, or we need to be completely separated, and I'll take care of my cell phone bill and we'll split the heat and all that stuff. I actually like the hybrid model. So the hybrid model is basically what my wife and I do. So if you can get on the same page with your spouse, what this does is, in my opinion, is that it creates, trust and transparency. It gives you, a clear financial picture, and it's easy to plan and pay for expenses because all those things are just coming out of the house fund, for example, if you want to look at bills. Some of the other things that come with that is kind of like a sense of autonomy and independence. So it's like, I make money, she makes money, we're both adults, she doesn't have, a crazy spending problem, I don't have a crazy spending problem. It works for us. So you can spend according to your personality, but we do have a rule that says anything over $500, we need to talk about it. So if I want to buy a grill that costs $600, I'll say, hey, I want to get a grill. Is that cool? Usually the answer is yes, right? If she wants to do something with her friends or whatever, I don't know, I'm just giving you an example, but it's usually never a problem because every week we both have money getting deducted into those 6 categories that I told you about. So we're never really worried about that. Heaven forbid, if one of us were to lose our income, then we'd have to recalibrate. But for the most part, it gives her a sense of independence and autonomy. It gives me autonomy. We're never really nagging. A lot of people, they put their finances under a microscope, which is fine. But, is the juice, the nagging really worth the squeeze, right? Now, if one of the partners has a spending problem, that's obviously different. But it all boils down to trust and discipline. And if you can check those 2 boxes, for me, or for us, hybrid is the best answer. So the other thing we share ever since we had our first daughter 2 years ago is our life insurance policies, which we got from today's sponsor, Policy Genius. If you have a family, you know how much your loved ones depend on you. In a worst case scenario, you wouldn't want them to worry about money. A good life insurance plan can give you peace of mind that if something happens to you, your family will have a safety net to cover mortgage payments, college costs, or other expenses so they can get back on their feet and focus on what's most important. Life insurance through your workplace may not be enough protection for your family's needs, and it won't follow you if you leave your job. Let me tell you from personal experience, it is super satisfying to check life insurance off your to-do list, just like my wife and I were able to do with Policy Genius. Policy Genius knows how valuable your time is. That's why their technology makes it easy to compare life insurance quotes from America's top insurers in just a few clicks. With Policy Genius, you can find life insurance policies that start at just $25 per month for $1 million of coverage. Some options offer coverage in as little as a week and avoid unnecessary medical exams. Their licensed award-winning agents can help you find the best fit for your needs. They work for you, not the insurance companies. That means they don't have an incentive to recommend one insurer over over another so you can trust their guidance. Policy Genius is for parents, caregivers, and anyone else who has people who depend on them. They simplify the process of getting life insurance so you can protect the people you love. No wonder they have thousands of 5-star reviews on Google and Trustpilot. Your loved ones deserve a financial safety net. You deserve a smarter way to find and buy it. Head to policygenius.com/whiteboardfinance or click the link in the description to get your free life insurance quotes and see how much you can save. So number 4 is budgeting together, okay? So the first 3 steps that we talked about, they're leading into number 4. There's a reason why I did them in this order. The reason for this, which I kind of alluded to in the last step, I kind of stole my own thunder for this slide, if you will, is basically figure out what your recurring expenses are. So list all of your recurring expenses that affect both of you, okay? This isn't necessarily, hey, she likes to get coffee, I like to get a burrito, right? Not stuff like that. That's why we have that hybrid model of being able to take care of stuff like that on our own. It just simplifies our lives. You don't need to split everything 50-50. So again, going back to my analogy is, if she's a billionaire and I'm some, starving artist, it doesn't matter because we both contribute what we can. So we don't necessarily have to split everything 50-50. It makes it easier for us. So say she makes significantly more than me or I make significantly more than her, maybe you can, the high income earner can take on a bigger obligation such as like the monthly mortgage payment, for example, and then the other spouse can take on groceries, maybe $2,000 versus $200 a month or whatever. I'm just giving you a simple example. So you don't necessarily have to split everything 50-50 if you don't want to. If you make relatively the same income, maybe you can. Maybe you do the one bank account, split everything down the middle. Maybe that's even simpler. But typically, spouses don't necessarily make the same income all the time. So the most important thing is, however, make sure you're paying yourself first. I've always talked about this on this channel. So try to maximize your 401k and your Roth IRA savings first, then go from there. So instead of one spouse having to worry about, do I pay the mortgage or do I pay the bills or what do we do? Try and maximize paying yourself first with tax advantaged accounts. That's what this says, max out tax advantage first. And then get to the stuff that, hey, I gotta buy X, Y, and Z, which is mandatory. Then I gotta buy X, Y, and Z, which is a want. So figure out your wants and needs after paying yourself first. And again, you don't necessarily have to split everything 50-50 unless your incomes are very similar. Okay, number 5 to finish things off is regular reviews. So obviously we have here monthly, quarterly, and annually. So what entails in each one of these things? Okay, what are we doing here? So a monthly net worth review, my wife and I do this literally on the first of every month. It takes literally 5 minutes. So we use some software. You can actually link all of your bank accounts and all the relative things or the information that you want to put in there. It literally tracks your net worth in a graph or a line chart, if you will. So we can see, hey, this month we gained or lost X amount of net worth. Where do we gain or lose? What can we improve? Everything look okay? Great. It takes literally 5-10 minutes. The quarterly review, this is something that you should review your goals. So your shared goals that you talked about or you established earlier in the year or earlier in the relationship, once every 3-4 months, go check this out. See if you're still in line. See if you're saving or spending more or less than needed. And that way you can recalibrate and readjust. And then finally, with the annual stuff, you should always do a goal setting or a planning dinner with your significant other. So if you have kids or whatever, give them to the grandparents, leave them with the babysitter, do what you gotta do. This is literally just for you two. It should be fun, it should be intimate, and your goals should be aligned. Again, this is not talking about your personal hobbies or things like that. This is what you wanna establish as a family and as a team, and you should revisit the shared goals that we talked about in slide 2. And then also, you should maybe think of like new goals. So my wife and I, we typically have a travel goal. We have a physical goal, like a health goal. I don't want to tell you what mine were. I shared them earlier in the year, but I'm not doing too well. Actually, I'm doing fine. I did 75 hard. I don't want to talk about it because it's like someone that's vegan. Hey, bro, I'm vegan. Like, yeah, I don't care, dude. So a lot of the physical goals I do meet, and you kind of subconsciously reach other goals just when you write them down and put it out into the universe. It's kind of crazy how it works. But make sure it gets written down. Her and I, we do it in a shared Google Word document. And again, we have like travel, we have finance, we have health, we have other things like that that are private, and we try and meet those every year. So again, monthly net worth, quarterly goals. just revisiting the shared goals, and then annual is either coming up with new goals for the following year. Typically you wanna do this like sometime in Q4, maybe around Christmas or New Year's time. Okay, my thoughts as always, conclusion here. We got taxes and estate, marriages, work, and then kids. Obviously, it gets more real with kids. You know, it's just another complication, another blessing. In my opinion, kids are the greatest wealth that you can have, other than, you know, time and health. But I didn't talk about taxes or estate because this is super specific to your situation. I didn't even want to put it in the video. But obviously there's benefits with married filing jointly. There's benefits with having a will and trust, getting your estate in order, all that good stuff. So definitely, if you start to get to a higher net worth, I would definitely start to look into that. Marriage, AKA relationships, they're work, okay? This is not a Disney movie. This is not some, you know, Hallmark classics, you know, where the dog comes over the hill and, you know, it's like the end of The Gladiator, if you've ever seen that movie. This is real life, you guys. Marriage is work. You kind of get what you put in. It's always a scale. Remember that. Always try and keep your scale balanced. And then finally, kids, you know, you add them into the mix, all this stuff gets a little bit more complicated. But if you've already prepared with steps 1 through 5, you should be able to handle this one as well. Thank you so much for watching this video. As always, click the like button, you know, subscribe. Hit the bell notification, guys. I have 1 million subscribers. My last video had like 20,000 views. So just make sure you're sharing these videos. I really appreciate it. And I'm also very excited to announce that Whiteboard Finance University will be live in about a week. Okay, I know I've been talking about it for a super long time, but we have 3 professors in there. They all have 3 really full depth courses. The one is on real estate, the other one is on personal finance and budgeting, the other one is on stock market and building your wealth pyramid. One guy is a CFA, he's a chartered financial analyst. The other person has 350 multifamily units. He's a real estate developer and investor. And the last person is a personal finance expert. He's written for money.com, Forbes, all that stuff. So I'm super proud of what we put together. It's been a long journey. But I highly recommend that you check out Whiteboard Finance University. It's essentially going to be a gym membership for continuing financial education with those professors, AKA personal trainers, whichever way you want to look at them. And then you have live streams with me and continuing education with them. Unbelievable value, something I'm very proud of. Thank you so much and have a prosperous day. Okay, so number 4 is actually budgeting. Leila, stop it! So number 4 is actually budgeting together. So